What if I told you that a 40-point difference in your credit score could cost you over $80,000 on a 30-year mortgage? That's not a scare tactic, that's math. Da-da-da-da. And the good news is, you can move that number faster than you think. I'm Duane Buziak, top 1% mortgage loan officer and founder of Better Mortgage Rates. Today, I'm breaking down exactly how your credit score affects your mortgage rate and the fastest legitimate ways to improve it before you apply. Here's how it works. Lenders use your credit score to decide how risky you are. The higher your score, the lower your rate. A borrower with a 760 score and a borrower with a 680 score applying for the exact same loan on the exact same house can end up with rates that are nearly a full percent apart. On a $350,000 loan, that gap costs the lower score borrower over $200 extra every single month. So what actually moves your score fast? Number 1, pay down your credit card balances below 30% of the limit. Credit utilization is one of the biggest factors and it updates monthly. Number 2, do not close old credit cards. Length of credit history matters more than most people realize. Number 3, dispute any errors on your credit report immediately. One wrong account dragging your score down could be costing you thousands. Number 4, avoid opening any new accounts or applying for new credit at least 6 months before your mortgage application. Here's what most loan officers won't tell you. At Better Mortgage Rates, we offer a free credit review before you ever apply. We show you exactly where you stand, what's hurting your score, and what to fix first to get you the best rate possible. Go to bettermortgagerates.com right now, and let's look at your numbers together. I'm Duane Buziak. Subscribe, and I'll keep saving you money every single week.